Disney beat on the revenue and earnings front, had a little problems with the sub growth, but overall this 116 was a key level, and you can see that we're pushing after hours. 7,000 jobs cut, complete restructuring, and the most important thing, when we broke the 116 level, that's when he announced on the conference call that they were going to stop showing subscriber growth and giving subscriber guidance. That is obviously huge for the company because now they're not going to have those expectations on whether or not they make or don't make. And basically, they're just going to go back to showing revenue and earnings, which is absolutely huge. Now, if we look at the weekly on Disney, we can see right here our level that we're looking at, that 116. We can see once we clear there, we start getting into this in this wick. Top of that wick gets you to about 127. Pretty substantial to think that you're going to get there. I mean, you could see how you could realize that there's a high probability. You have this DTL right here, downward trend line, and you can see how you rode that down. Then you had your little flip, broke over, and then you just kept pushing all the way through. I think that's significant. Subscribe to the channel, click all notifications. Make sure you do hit the all notifications button because what we go over here is extremely timely. You don't want to be watching it a couple weeks later. Watch Netflix tomorrow. The fact that you can no longer look at subscriber growth out of Disney to determine what Netflix is going to do is going to add a little bit of favor to Netflix. You can actually see that you're up a couple dollars after hours. Actually got as high as 372. Then you have a little pattern setting up here where you have these 1, 2, 3 down, and today was the first higher high here. And we've seen these patterns in the past where you just have these little flips and then they usually break out and try and test new interim highs. So watch this tomorrow. Watch how it acts on the Disney news. I actually think it's very favorable for Netflix. I'm obviously not the only one that thought that. You can see the move after hours in Netflix when Iger made that announcement about the subscribers and no longer showing it. So I would just watch this tomorrow. I think that this could benefit greatly from that. Make sure you stay to the end because we're going to go over the dollar, we're going to go over the index, and we're going to go over the dollar index correlation and how that is starting to affect the market a little bit. Names for tomorrow that we must watch: ENPH's nasty reversal. It needs to hold the low of the gap fill. So you can see the rally right up here and how we rallied up to this level and came right back down. So that 246.56 we hit as a brick wall, slammed right into it, and then you can just see how we gap filled back here. Once we gap filled, that was pretty much it. You can see the gap right here and how the line comes right across our support line and how we were flipping those levels. So something to think about. And I would really pay attention to this level. I think it's very significant. If you break this, you're going to have a problem. This is massive selling, massive. And you didn't see it at first today. You had very positive feedback coming out of investment banking houses, and no one was really expecting this kind of fade or this significant. And that's a pretty big fade. That's $30. It's more than a 10% move from the gap up. It's pretty substantive. Usually if you're going to do this, you'll gap fill and you'll hold the close, which was roughly 228. Instead, you dropped another $8 right down here. This is a 20 EMA, just to give everybody an understanding of where we are in the pecking order. But if something's going to break tomorrow, and I'm not sure that it is, but if something's going to, I'd be watching these solar names because this is really nasty. And obviously somebody wants out. Look at the amount of volume that came in there today. Now, Tesla is one that we actually added in the Alpha Chasers community. We traded it a couple times, actually bought it last night. And if you listen to yesterday's video, I walked through it. So you had this pattern here, and I really want to discuss this pattern because this is the day after, and you can watch yesterday's video. I can actually link it at the end, and you just go to the Tesla section. But right in here, just higher high close, higher high close, higher high close. And every single bar is eating into the wick, which is price rejection of the other one. Also, do me a favor, please comment on these colors. Let me know what you think of the blue and the red and the black background. So I had some people that weren't crazy about the gray, and then I looked at it, looked a little dull. So I'm trying to mix it up a little bit. I kind of like this color combination, but I am open to ideas. So just let me know what you think. Now, if you see how we're coming across here, and then you started lifting up, now that move up was a rejection of up here, which there is a very significant bar up here, right? You have this doji. Dojis are places of uncertainty, and when they make a decision like this one did, that was it. You broke down, and then we just kept selling down the entire time, and then you just had tax selling all in December the whole way through, and you can see how that played itself out. But the question is, what do we do now? Well, you flip that doji to the upside for the first time. Now, if I make this a 55, you will notice something that is happening that has not been happening for some time. Just watch these numbers that are right over here and watch how they move. And you'll start to see them and see how they're getting lower and lower and lower, right? And now look at them. Okay, see how they just went higher? Okay, so in other words, the 55-day moving average is starting to slope up for the first time in a very long time. In other words, we have not sloped up since July 2022. So I would not rule this out, and I would not think that this is just over because it seems to be breaking out and making new highs. Is it overextended? Of course it is. It's moved 100% in 23 days. Doesn't mean it can't get goofier. And so what I would suggest is just taking a look at it, come in intraday, find your spots, and go from there. So this is one we actually did in the community today, and all we did was watch it. And I switched to 2-minute charts today because we were getting really wicky. And so what that will do is it'll take out some of the noise. So if you look at a 1-minute chart, right, you can see that you have a lot more noise in a 1-minute chart. And I like trading them, but sometimes you're not getting a full picture. You're getting all these wicks and you're not really understanding what's going on. So if you drop to a 2-minute and you increase your time frame, and I have a saying, when in doubt, just zoom out. That's all you have to do. If you zoom out on a time frame, it'll give you a little bit different perspective. And this clearly does, because now how defined these bars are, we have wicks. We know wicks are price rejection. So we know the selling stopped. And we can see this level pretty clearly, but let's just mark it off so that you can see that wick right here. And then on top of that wick, you can see how that was the low, and then it was just sheer rejection here. So that let us know that we no longer had sellers down here, right? Then we have this blue bar, which envelops the red bar. So to me, all I need is the bodies to be enveloped. I don't need the entire bar to be enveloped to have a bullish engulfing. Once that happened, we flipped the 9 EMA, and then it was just on. And it was just a very simple day trade, easy way to pull money out of it. And quite frankly, all day, all this thing did was go sideways. Even when the market trended down, Tesla did not go down. So I would not rule this out. When you have a market that's trending down, orange is the S&P, and you're trending down like this, you want to pay attention. You want to pay attention to that. See how we're hitting higher highs even though we're trending down? High relative strength. You want these names on your radar tomorrow. All good things need to come to an end, right? So you can see this level right in here, and you can see exactly how we're acting at that 227.56 and how we've rejected. So now we have this doji sitting right in there, and we can see that pretty clearly. Let me know in the comments if after we start looking at the chart, if it's okay to take out this watermark or if I need to leave them in the whole time, just because sometimes to me it becomes a distraction. But I understand that if you're on a mobile or a phone, you want to know what you're looking at. It's probably impossible to see what's going on up here. So what I like about this is you still formed a doji. So you didn't break down. You didn't take out the lower low. That is very different action than we had in Microsoft today. So I would not rule this out, but we've come a long way in a short period of time, and we're going to go through the indexes here in a moment and talk about it. So I would want to see what this does. Doji is place of uncertainty, and this had an enormous move in a very short period of time. Meta. This is Meta on an hourly basis. You can see the run up, pull back, lower high, lower high. I was getting a little excited. I'm not going to lie. I was pretty happy with the way we closed yesterday. But my hopes and dreams were smashed. All of a sudden now I've got this bear flag. This is the all-time high anchored VWAP from the peak. Now I've got this DTL. I've got an anchored VWAP I can't break, right? So you can see the lines here. Now I've got this wonky bear flag sitting right on support. So, and I could not get above the just regular VWAP all day today. So that is concerning to me. And yes, there's 40 billion out there that they need to buy, but that does not mean that we might not gap fill, or at least partially gap fill to some level. And that's a long way down. So we're going to have to be cognizant of that. This is the SPY. This is the S&P So if we take a look at this, right, we can all see that DTL right here, right, the downward trend line. And we can all see this resistance point right in here. So we have this sloping down, but the bars are getting smaller. This is on an hourly chart, and I think that this is worth talking about. So we're not really breaking down anymore. We're just kind of going sideways, which is kind of interesting because the dollar is continuing to push, right? So if we take a look at the dollar, and we put this out in that newsletter the other day about the dollar and this particular three-soldier pattern and the significance of it, I would not rule this out as something that could absolutely continue to move and lift. Now, I do think it's something that we need to pay attention to. Let's throw that one in because that's more significant. That's the 55 that's in there right now. And you can see how we're just sitting right up below that and we're just building this flag right in that area. But the dollar is pushing, and as the dollar is pushing, it should be weakening the S&P. Now, if we take a look at the entire move that we had here on the dollar, and you just measure it out really quickly, and you go from peak to trough, you had a 3.5% move. Well, that's pretty substantial. Then you kind of come over here and just look during the same period in time and go, well, how did we do here? Well, we went up during the same period of time. So we actually went up the same time that the dollar was rallying. And that brings me to my next point. This is the dollar and S&P correlation. So in other words, how is the dollar doing in regards to the S&P? The higher, the more correlated the two are. Well, we can see the peak in the dollar was right here, but the peak correlation between the two actually happened 2 weeks later. And then you can just start seeing how we started having that correlation drop. It's very possible that the dollar will still affect the S&P. There's no doubt about that, it will. But the correlation and magnitude of that is changing. And I think that's worth noting. So in other words, if you take a look at October, and you can see that we're at about a 30 and what really 0.31. And what really matters here is not so much the number, but the percentage change. So if you measure from up here and then you come down, and let's just look at where we're at right now, and we have a 21% reading. That means that the correlation between the dollar and the S&P has dropped about 20% over that period in time. And I think that's worth noting. Everybody have a great evening. To join the Alpha Chasers community, simply click the link up here on the top right and you will be added to the wait list.